Good morning, everybody. Welcome to this latest webinar from PMR regarding realising business opportunities in our region of focus and expertise of Central and Eastern Europe and Russia. Our subject matter for today is the clothing and footwear markets of Poland and other selected CE countries. We'll be looking at current status, key trends and development prospects for these markets. To briefly introduce myself, my name is Mark Hampson and I am Head of Business Development here at PMR. For background, PMR is a market intelligence, research and consulting organisation headquartered here in Krakow. We've been here for nearly 19 years, employing over 100 in-house professionals, all specialists in their sectors, and between them speaking in the region of 15 languages, with an in-depth understanding of each of the key markets and sectors throughout the region. I'd like to start immediately by introducing our speaker for today, Gergely Szilágyi. Gergely is a retail analyst here at PMR with a particular focus on the clothing and footwear markets. Gergely, I'll pass over to you. Thank you.
Thank you, Mark. I would also like to welcome everyone to this presentation. I am Gergely Szilágyi, one of the analysts who worked on this presentation. And today I would like to talk to you about some of the key findings of the report. Let me give you a short rundown of what we are about to see during the presentation. Okay, sorry. So first of all, I would like to talk to you about the short overview of the market. That means trends and the structure of the market, and also some expansion trends that we see on the market. Then I will move on to the introduction of the top players. We will look in detail onto the top 2 players of each of the segments. Then we will move on to major trends that we believe are interesting on the market. I will give you 3 such trends. And finally, I will talk about the outlooks, how we evaluate the future performance of the market in the next 3 years. Before we jump into the presentation, though, I would like to give you a few information that will help you better understand what I'm about to talk about now. First of all, the time span of our report is the interval between 2009 and 2015. So we give actual data for the years between 2009 and 2012, and we give forecasts and estimations for 2013 and 2015. However, as you will see already in my presentation, we regard the year 2008 as quite important, as this is the year that we consider the pre-crisis level, so the last year before the crisis, with let's say the normal development of the market. So it will come up in my presentation and in the report as well. We will compare current market trends and market values to this year as well. As for the geographical scope of the report, for the purposes of the report, Central Europe consists of 6 countries, as you can see on the slide. So these are Bulgaria, the Czech Republic, Hungary, Poland, Romania, and Slovakia. Whenever we refer to CE, we mean these 6 countries. And finally, for the introduction, I would like to talk about the exchange rates that we use in the report and in the presentation as well. First of all, why is it important? It is important on one hand because, as you will see later in the presentation, most of the major chains in the region are of foreign origins. But even those market players who are locals tend to have their manufacturing outside of the region in a growing trend, mostly in Asia, so their costs also rise in other currencies, mainly in euros or USD. And secondly, it is important because we have seen quite substantial exchange rate fluctuations in recent years. As you will see on my very first chart. Of course, what I just told you only affects 4 of the 6 countries, as Slovakia already introduced the euro in 2009, while the Bulgarian lev is pegged to the euro, so that practically serves as a constant exchange rate. So let's start with the overview of the clothing and footwear market in Central Europe. First of all, I would like to give you the market value in these selected years, and also already some forecasts. And you can see that the columns are for the market value calculated in constant exchange rates with this grayish or dark bluish color, and with current exchange rates. These are the light green columns. My very first point with this chart is that, as I already referred to it, exchange rate fluctuation is quite important in the region. As you can see, especially in the year 2009, there is a major difference between the two columns. This is, of course, the result of the crisis hitting the region and causing a major depreciation of over 14% of local currencies. That is an average for all the four currencies that are used in the region. But as you can see, the distances or the differences between the following columns, fluctuations did not stop, unfortunately, in 2009. And as we could see from the annual reports of several of the analyzed companies, they do play a major role. I could tell you a number of examples where actually the performance of the company is positive in local currencies, but as soon as it is translated into the currency of their bookkeeping, it turns into a negative trend. And my second point that I would like to make with this chart is the level of the market, namely that the market still hasn't regained its pre-crisis, so let's say 2008 level as of 2012. Here again, there is a major difference in terms of which currency or which exchange rate we are using. But even with the constant exchange rate of 2008, the market has only reached 99% of its pre-crisis level. However, for next year, we are absolutely sure that the market in the region will surpass its pre-crisis level. Unfortunately, I cannot say the same for the value calculated with current exchange rates. As you can see on the chart, it is not forecasted to reach its pre-crisis levels until 2015. Now I gave you a short overview of the development of the whole market. Now let's break it down into the respective countries in the region. And this chart shows you the absolute growth, so in absolute terms, in million euros, of the six countries of the region as compared to 2008. And as you can see, here already Poland stands out because this is the only country that managed to gain, and not even a small, a quite substantial rise since 2008. That is over 500 million euros. So the Polish clothing and footwear market is over 500 million euros bigger than it was in 2008. None of the other countries have similar results. As you can see, Bulgaria is has just regained its pre-crisis market share. It is in plus 1 million euros, so it is quite minimal. While Hungary and the Czech Republic, they are practically there, so the differences are still negative, but only 4 and 5 million euros respectively. So compared to the whole market size of these countries, basically they reached their pre-crisis levels, while Slovakia and Romania are not there yet, and we forecast that they will not reach their pre-crisis levels in the coming years, so until 2015, as long as our analysis goes. I would like to make here one more point, and that is the major difference between Bulgaria and Romania. We tend to consider these two countries very similar, as they are both on the Balkans and have similar development levels. However, as you can see here, they show a very, very different picture in terms of development since 2008. And that is because Romania was struck in a very specific point of its development in 2009, namely that the development, the surge of the very dynamic growth of the clothing and footwear market has just started before the crisis hit the country. So in 2008, the market recorded a growth of 28%, and in the very next year it dropped 24. And ever since it is lagging just with minimal growth rates or rather stagnation. This is why we see such a big difference, because in Bulgaria this high level of growth hasn't started yet. In 2008, that is why they didn't have so much to fall back from. So much about the growth trends in the region. Now I would like to go on to the structure of the market, and here I would like to give you a comparison between Poland and the rest of the countries. As you can see, Poland has an over 50% market share, 51.4% according to our estimation in 2012, which means that the Polish market is actually overrepresented in the region. Let me give you some baseline for why we say that it is overrepresented. So if we look at because if we look at the share of Poland in terms of population, it was 41.5% in 2012, or the share of GDP, in terms of GDP, 43.6%, while the share of clothing and market is much higher. This leads to another interesting point on the market, that if a company has top ranking in Poland, it means absolutely firm position in the region as well. I will refer back to this a bit later in my presentation. As for the future of these shares, we do not expect Poland to lose much of it, although as we forecast Romania and Bulgaria to be the fastest growing countries or markets in the region in the next 3 years. We expect the share of Poland to decrease a little bit, but still remain above 51%. Now let's move on to another, the structure of the market from another point of view, and that is the share of the respective segments, so clothing and footwear. As you can see on the pie chart, the market is clearly dominated by the clothing segment, almost 76% of share. Of course, this might be very different in the respective countries. As you can see, Hungary has an over 80% share of the clothing segment. What is for us a bit more important because of the future of the market is the share of Bulgaria and Romania. I mean the share of the footwear market in Bulgaria and Romania. It is relatively high compared to the rest of the region. In both countries, the footwear segment is approximately at around 28%. And we believe that this is because of the, let's say, the lower level of development of the clothing segment, and not because of the higher level of development of the footwear segment, meaning that this really fashion clothing segment has just begun to expand in these two countries, especially in Bulgaria, a bit less in Romania. So there, people only bought clothing products when they really needed to replace the existing ones, and not because they were trying to follow upcoming fashion trends. Now there is a different trend. We can already see the very strong expansion of international chains in the markets, and they will most probably change the attitude of the market in the coming years. So we forecast that the share of the clothing segment in the whole region will rise to approximately about above 76% till 2015. Now I would already like to show you the top 10 players, this time combined for the clothing and footwear segments. So these are the top 10, and our message with this slide is the key to their success into their regional leadership position is presence in all 6 key markets. As of course you may see that there are exceptions. I wouldn't like to talk about Tesco now, but in case of CNA, CCC and Taco Fashion, they are not present on the Bulgarian market, although this tells more about the Bulgarian market than of the retailers. It's just the Bulgarian market is not as developed yet, as you will see in a few seconds. But still, the overwhelming majority of these light gray squares show that most of the players are present in all of the markets. There are exceptions on this chart from another point of view, and that is that all the market players that we wrote with white font color are regional subsidiaries of international chains operating in the region. There are two exceptions, and already on the top of the ranking we see LPP. That is, for those of you who don't know or not familiar with the company, that is the biggest clothing company of Poland. CCC is also of Polish origin, but it is a player on the footwear market. Now these two companies managed to get to the top 10 ranking based on their performance on their home market, meaning Poland. So this also means that Poland is a very good incubator for later international competition. These two companies reached such a level in their development that for them the logical step was to expand outside of their home country and in the region and also outside of the region as well. I will come back to this a little bit later, but this leads us already to the expansion trends in the region that I would like to show you. However, I would like to ask for your patience a little bit, as I would like to go on with let's say more traditional expansion trends in the region, and I mean more traditional in the sense that the region is still defined by expansion of foreign retailers into the region, as for example seen in Bulgaria and Romania. I already mentioned that these two countries are a bit behind of the other four in terms of development. How much behind? That's a good question. I would say that if we just consider the market entry of these companies that whose logos I put on the chart, I would say that they are approximately 6 to 10 years behind of, let's say, Poland or the Czech Republic, so the pioneers of the region, in terms of the expansion of major international clothing and footwear chains. Why is it happening now? That's a very important question. And here I would like to take a side note as well, that in my current presentation I'm not going to talk about the the shopping center markets in the respective countries. However, in the report, of course, you will find detailed analysis and data for all of the countries, for all the planned, existing, and forecasted shopping malls being built, all the GLA numbers and everything you may need for the respective markets. I would just say this in connection with shopping center development, that this is the key factor that made the expansion of these retail chains in Bulgaria and Romania possible. So again, the boom of shopping center development started in Bulgaria a bit earlier, so in 2-3 years ago, while in Bulgaria even less. And the emergence of high-quality retail space enabled these major chains to enter the market with their own shops and not only through franchises. The second trend that I would like to mention is the emergence of clothing discounters, first and foremost in Poland, in the Czech Republic and Slovakia. However, we consider this trend important from another aspect as well, so I would like to elaborate on this one a bit later when we come to other trends that we see in the region. Now I will just say that much, that we see this as a clear sign of declining purchasing power as of the outbreak of the crisis in the region, so after 2008. And as I said, I will come back to this shortly. The third market expansion trend in the market that I would like to talk about is what I already mentioned in connection with LPP and CCC, and that is that these companies have grown so much. They're respective leaders of their segments in Poland. So LPP is the leader of the clothing segment in Poland, and CCC is the leader of the footwear segment. And they have grown so big in Poland that, as I already said, the logical step was to take on to a and international expansion. And so far, as we see, they are quite successful with that. As I already mentioned, I will give you a comparison of the top two players of each segment a bit later, and I will come back to these expansion trends, these players then. And so much about the overview about the market, or of the market. Now let me move on to the top players in the market. So first of all, I would like to give you just the list of the top 10 players of both the clothing and the footwear market respectively. I already mentioned that there is a major difference in terms of share. So the market is clearly dominated by the clothing chains, like 75 to 25% approximately. There is also another difference in terms of the nationality of the players. As you can see, and we mark this with blue font color, the local players. By local I mean they have origins in the region. And the difference is that while in the clothing segment, the top 10 retailers come from outside of the region, with the exception of LPP, as I have already mentioned. But in the footwear segment, 70% of the top 10 are local chains. Let me also give you some numbers for the revenues of these companies, so how much a company needed to make it to the top 10. So LPP generated an annual revenue of over 700 million euros in 2012. That got it the leading position in the clothing segment. Inditex generated approximately 550 million euros, and I would like to also give you Pepco. So a company needed approximately 150 million euros to make it to the top 10. The levels in the footwear segment, however, are reasonably or lower. So there, Deichmann needed a bit over 410 million euros to make it to the top 10, top of the top 10 list. CCC generated approximately 330 million euros, while Kazar Footwear, the last player of the top 10, managed to get to the top 10 with only 25 million euros. So there is a major difference in terms of revenue between the two segments. As for the concentration of these two segments, it's quite similar. So the top 10 companies account for approximately 36.5–37% of the respective markets. So this is quite similar in both segments. And now, as I promised, I would like to give you a comparison of the top two players in each segment. First of all, the clothing segment. And I believe that this is a very interesting comparison, as the top one and the first two players in this segment couldn't have a more different background than this. You may see LPP, the biggest player of Poland, and since 2012 the biggest player in the region as well. And next to it there is Inditex, the biggest clothing retailer of the world. As you can see in their total revenue from 2012, there is a major difference. So LPP generated over 760 million euros in 2012. This is the overall revenue, so not only from the region, while Inditex generated 15.9 billion euros of revenue in 2012, which made it the top clothing retailer of the world. It is obvious that they have major differences in terms of the importance of the region. So in case of LPP, the revenue generated in the region is 95%, whereas for Inditex it is only 3.5%. You may also see the shares of the stores located in the region compared to the share of stores outside of the region. What I would like to point out, though, is the two shares compared, so the share of revenues and share of stores located in the region. So in case of LPP, the share of revenues is higher than the share of stores, which means that the average revenue per store is actually higher in the region than in stores outside of the region. This is understandable, as most of the stores of LPP outside of the region are in lower income countries such as Russia or the Ukraine. Whereas for Inditex, it is exactly the other way around, because Western European markets are clearly more developed than Central Europe. So there the average revenue per store is much higher than in Central Europe. And we also listed for you the banners that these retail chains operate. I would like to mention Reserved. That is the main banner of LPP for the international expansion, but I should also mention House and Mojito as well. In case of Inditex, of course, Zara is the flagship of the company, but all the other banners are present in the region, with the exception of Piterke, that is not present in any of the countries yet, and we also don't have any information if it is planning to enter the market. I already mentioned the expansion strategies of LPP. Now I'd like to say a few words about that. So LPP decided to move out of Poland in recent years, and for example in 2013 it is planning to spend the biggest share of its expansion budget mostly in Russia and the Ukraine, but also in other CIS countries. We are definitely curious to see how this development goes. We believe that the chances of LPP are very good in this aspect. Now let me move on to the footwear segment, where if I said that the clothing comparison was interesting, this is even more interesting in my opinion, as it is also one international company or one bigger chain versus one local, so one regional chain of CCC. But what makes it even more interesting is that CCC has just recently announced that it is planning to move on the home market of Deichmann, and it is planning to set up to 1,000 stores in Germany in the next 10 years. And actually this was already the second very ambitious announcement from CCC, as in the previous year, so in 2012, they set another ambitious goal in front of themselves, and that was to be market leader in at least 3 of these 6 countries, aside from Poland, where they are already market leaders. So in Hungary, in Slovakia, and in the Czech Republic, they intend to dethrone Deichmann and become the top player in the footwear segment. As you can see, there are again major differences in terms of revenues and in the share of the region. However, this may change very fast based on the dynamics of CCC's expansion in the region. Let me just give you some numbers to support that. So CCC opened its very first shop in the middle of 2012, both in Hungary and in Slovakia, and since then, until May 2013, they opened altogether 28 stores in Hungary and 19 stores in Slovakia. So the rate of expansion is very fast. So if they manage to keep it up, and if they manage to pace and finance the rate of their expansion, we believe that Deichmann will have very serious competition in the coming years. So far I've talked about the overview of the market. I told you how we evaluate the development of the region in terms of constant exchange rates and current exchange rates. I also talked about the structure of the market, the share of the respective countries, and the segments, clothing and footwear. I also showed you the geographical breakdown of the market, of the top market players, and I also introduced you to the top 2 market players of each segment. Now let me move on to the major trends of the market. This list will not be exclusive. We only selected for the purposes of this presentation 3 trends that we found interesting for you. So let's go. First of all, and this I already referred to previously, this is the let's say, the market innovations, how they reacted to the declining clothing and footwear spending that we observed in the region in the last 5 years, so since the outbreak of the crisis. Here I'm going to explain to you three such trends that we see three such, let's say, innovations. Although all of these trends are present in every country, in all of the countries that we consider in this report, their respective importance depends, of course, on the taste of the local consumers. I'm not going to talk about that, but you can see it on the chart which trend is more significant in which country. So let me give you the short definition of these trends. First of all, extended in-store promotions. We mean by this a growing rate, length, and frequency of promotions. With other words, promotions start usually earlier, already in the season, or already at a time that was considered previously in the season. Their length is usually longer. They practically almost reach into each other, and the depth, so the depth of the discounts that retailers give is much higher. Previously, it was on average the promotion started with, let's say, 10% and went up to, let's say, 50% of the price. Nowadays, it's not rare to see promotions starting already at the 30 to 50% level, and they go up as high as 80 to 90%. The second trend that that I wanted to talk about today is the expansion of discounters. However, here I will still only say that this was the reaction and probably the most significant reaction to the declining clothing and footwear spending. Actually, we consider it so significant that I will give you another chart on this one. So now I will move on to the emergence of monobrand outlet stores in the region. Monobrand outlet stores, in the sense that previously we also already knew multi-brand outlet stores that were common. Nowadays, however, the emergence of the monobrand type is also important. And when we talk about outlets, there are two major concepts. One of them is the basic one. Let's say when retailers move the outdated collections to their outlet stores, so that the discounted sales of these outdated collections do not damage the sales of the new collections. There is, however, a more, let's say, developed concept for outlets, and that is when retailers come up with their specific outlet collections. So basically what they do is that they introduce second-tier products to their brand without affecting their overall brand image, as these second-tier products or goods are sold in a physically different location. And of course, this is a good trend for consumers as well, as all of these help consumers to buy their clothing and footwear for a cheaper price, even if they prefer to stick to their good old branded products. As you can see, we also wanted to give you an evaluation of these trends. And while we evaluate the first two, so the expansion of discounters and the emergence of outlet stores as positive, they are contributing to the market with introducing new distribution channels. As for the third one, so the in-store promotions, we have serious concerns, and we have serious concerns because of two reasons. First of all, the sustainability of this of these promotions. What these basically mean is that the retailers are trying to undercut each other in terms of pricing, which will drive the revenue of the market, as we could see most significantly in Hungary, but in other countries as well. So they do contribute to the development, the positive development of the market, but they significantly undermine profitability, which, especially for smaller chains that do not have the economies of scale, might lead to serious problems. And secondly, we see it as a negative trend, as it, in our opinion, it deforms customer or consumer habits and expectations. Some retailers already raised their voice, saying that in interviews, saying that they see a trend that consumers are not willing to spend their money before the discounts are introduced, so they decide to, even if they go and find the appropriate goods that they want to buy, they decide to wait 2-3 more weeks until discounts are introduced, and they buy these products there then only for a lower price. And this is a trend that might be difficult to overcome in later years when the trend will turn around and the purchasing power will rise again in the region. So this has to be considered for market players as well. And as I promised already several times, now I would like to come to the expansion of clothing discounters in the region. As you can see on the chart, the store count of such discounters grew by over 60% since the end of 2010. That is a very, very significant growth. Let me give you some numbers for the respective countries. For example, in Poland, the store count of Pepco, the subsidiary of South African investor Pepco, has reached over 400 stores in 2012, and they are planning a further expansion of another 200 stores in the next 2 years. And for example, Kick Textilien of German origins, it belongs to the company Tengelmann. It only started its expansion in Poland in 2012, and it already opened 20 stores until May 2013. There is a major local chain in Poland as well called Textile Market. It operates currently 273 stores in Poland alone. Then for the Czech Republic, the biggest player is Kick Textilien with over 160 stores, but Taco Fashion is also present with over 100 stores, and Pepco already announced its entry to this market as well. In the Czech Republic, we also see a local player called Eurolidovka with approximately 20 stores. If we look at the store count charts of the other countries, we will, so the store count chart, not only clothing discounters, but the overall store count charts, we will find clothing discounters at the top of these charts, and the names will be very similar. So Kick Textilien, Pepco, and Taco Fashion. I would like to give here another side note that we know that Taco Fashion already positions itself above the discounter segment. However, we evaluate this business strategy to be still similar. So they run a vast number of shops, and their price level is what they call affordable fashion. So we still consider them in this discounter segment. Now I would like to move on to the last trend that I would like to introduce you today, and that is the growth of online sales in the region. Online and e-commerce was the fastest growing distribution channel since the outbreak of the crisis in 2008. We estimate that the growth rate of this distribution channel was approximately 13% in 2012, and it reached approximately 1 billion euros. So only the e-commerce sales of clothing and footwear products in the region. There are, however, major differences in the region. So as, for example, in Czech Republic, it is already more frequent, and consumers are willing to buy clothing and footwear products more and more. There are countries such as, for example, Hungary, where the consumers are still a bit reluctant, although there the rate is also going very, very fast. As for the drivers of this growth, the first one is quite obvious, so the availability of the infrastructure, so that more and more households have access to the internet. Secondly, from the point of view of consumers, of course, pricing. So usually the same product costs significantly less when purchased over the internet than in a brick and mortar store. The next one is actually an interesting point from the point of view of consumers, the availability of the products. Because this way, so over the internet, consumers are able to buy such products that were, for example, not meant for their region. So that were, for example, only meant for the Western European countries. With the use of cross-border e-commerce stores, they are able to purchase these goods as well. But it is also important for consumers living in smaller towns or villages in these countries. We see that trend that both the use of e-commerce in smaller towns and villages is growing very fast, and the cross-border purchasing from e-commerce stores is also growing significantly, especially in countries such as Bulgaria and Romania. And the last, what I would like to mention here is the leveling of the gender mix. What I mean by this is that previously e-commerce was the field of male consumers. Nowadays, however, more and more women decide to shop online, and this brought about the emergence of such product groups as, for example, clothing and footwear, or cosmetics, or home decor. And the growth rate of these segments or these product groups are driving the overall growth of e-commerce in all of the Central European countries. So much about the description of the market as we saw it in 2012. Now I would like to talk shortly about the outlooks, so the future, how we estimate it. A very important note that these arrows that you see on the chart do not refer to the decline of the market in case of Hungary or Poland, for example. What they mean is the change of growth, short-term growth, so within 1 year, compared to the growth rate of 2012. Having said that, my second important point is that we do not forecast any of the countries to decline in the coming years up until 2015, which means that that the worst case, some markets will stagnate, but none of them will decline in the coming years. Let me go through quickly the countries. Bulgaria already has, of course, a growth rate that is not comparable to pre-crisis levels, but since the crisis, I would call it healthy, around 2%. The Czech Republic will remain at a stagnating level, so a growth rate of around 1% annually. The picture for Hungary and Poland is quite different, because Hungary will drop its growth rate in the coming years, but Hungary has the highest growth rate actually in 2012. So this drop will still mean a quite strong growth, as we forecast for 2013 a growth rate of 3%. For Poland, and this will definitely affect the whole region, Poland will go into a stagnation in the coming years, so in 2013 and maybe in 2014 as well. The growth rate will drop below 1%. While for Romania and Slovakia, Romania, as I already mentioned, is one of the two countries that will grow twice as fast as the average of the region. The other one is Bulgaria. While Slovakia contracted in the year of 2012, so this arrow only means that they will come out of the decline, and they will show a low level of growth. As for risks of the coming years, I already talked about the risk of exchange rate fluctuations that will definitely have to be considered on the market. And unfortunately, this is basically out of the hands of these countries. So it is the exchange rates are mostly defined by global processes and global outcomes. The other risk that we see is an economic one, so the performance of the Eurozone economies that affect the purchasing power of the consumers in the region. There we see, in addition, some political risks. There will be elections in several countries in the upcoming 2-3 years, and as we saw from historic data, such election years tend to affect sales very substantially through the mood the election campaigns generate. And we also see the risk of altered consumer habits as a result of certain policies run by pricing policies run by the retailers. This concludes my presentation for today, and Mark, I will come back to you.
Okay, thank you very much. I hope everybody found the presentation very useful. Again, thanks, Gergo, and that everybody found some useful takeaways. We will be sending a copy of the slide deck to everyone that's attended today. We do have, I think, a number of questions that have been entered during the course of the presentation. Gergo, if you'd be willing to answer one or two. Firstly, you talked about constant exchange rates, but we have a question. When will the clothing and footwear market regain its pre-crisis level calculated with current exchange rates?
Okay, thank you for the question. So this is not an easy one. As I already told you, our main focus in the report is only till 2015, and we forecast that the value of the market with current exchange rates will not regain its pre-crisis level until that date. However, of course, we run forecasts that are not included in the report, and based on that, we believe that this should come as early as 2017, 2018. And why is that? Because I already mentioned during my presentation that the exchange rate dropped like approximately 14% on average in the region, and since then in some of the countries it continued, the local currencies continued to depreciate, and the so far not very strong market growth will have to make up for this sizable drop.
Thank you. Okay, secondly, how do we evaluate the chances, or how do PMR evaluate the chances of local players on the regional and international markets?
Okay. So when we talk about local players that try to go onto the international markets, of course, the already mentioned LPP and CCC come to mind first. I think their chances are rather good, especially in case of LPP, that coming from this region, so companies from this region usually have a very good range of information and usually good contacts towards the east, so the ex-Soviet markets. This should definitely help them. They also have a healthy cash flow to finance their expansion in these regions. So I think their product range, I think, is appropriate for the region. So if they manage to secure the necessary financing to finance their expansion, then LPP will do quite well, in my opinion, in the coming years in the eastern markets. As for CCC, as I said, their expansion goals are very, very ambitious, and they have two of those very ambitious goals. So I think in their case, the key will be if they manage to pace their expansion and don't rush ahead too much, so that they cannot then keep up from an organizational point of view with their growth rate. If they manage that, then they have a very good chance in the Central European region. As for Germany, we will see. There are, of course, other examples for international expansion. I should say that not very successful ones as well. For the successful ones, I could mention, for example, Candelow's recent expansion to the Balkans, or Shoebox, that is a Hungarian footwear retailer and is present in numerous countries all over the region. However, for example, Leonardo and Bata, these are the market leaders of Romania and the Czech Republic, respectively, on the footwear market. They also tried international expansion, and unfortunately, they weren't very successful with that. So I think we should evaluate these trends on a case-by-case basis, looking at the strategies and positions of the respective companies.
Okay, thank you. And we have one more question that's arrived for now. Why did the clothing discounters start their expansion in Poland, the markets of Poland, Slovakia and Czech Republic, rather than Bulgaria and Romania?
Yes, this is also an interesting one, because if you think about it, the discounters would have, for the first sight, a better opportunity in such lower or less developed and lower priced countries such as Bulgaria and Romania. And I should say that we do not have first-hand information from the retailers why they didn't start their expansion in these countries, but according to our analysis, I could say that what I would say is that in order for the discounter strategy to function, it requires an already established mid-price segment, because the key of the discounters is that they bring in good quality clothing. They distribute it all over the country for a lower price. Whereas in these countries, I mean in Bulgaria and Romania, there is the mid-price segment represented by these major chains such as CNA or H&M or some banners of Inditex are still not yet so established. So basically these discounters would compete against local chains. Or not even local chains, local small independent players whose price level is pretty similar to those of the discounters. So this would be my my answer to this question, which of course also means that as soon as the markets in Bulgaria and Romania start to develop, I'm sure that these discounters will appear in these markets as well.
Okay, thank you, Gergo. Much appreciated. What I'd like to do just for a moment, we have a couple of more questions that have arrived, but to give Gergo a moment to gather his thoughts and put a response together for the questions. Just a moment to mention, Gergo has mentioned many times a number of reports that are available from PMR currently that take a much deeper and more granular analysis of the markets that we've been talking about today. Details will be in the slide deck that we will send to all of today's registrants. So please, if you have any further questions, we'd invite you to get in touch. Or if you'd like to see further samples of the reports, again, please let us know. Three specific reports I'm referring to: an analysis of the clothing and footwear market in Central and Eastern Europe, a further report dedicated specifically to the Polish market, which, as Gergo says, is something in the region of 50% plus of the regional total. We have a similar study looking specifically at Russia, available in the third quarter of this year. And again, for any additional details, samples, then please let us know. Just a quick behind the scenes of PMR, who we are, what we do. As I touched upon at the start, in business since 1995 here in Krakow. We are by competency organised into four areas. We have a consulting division who deals with very much market entry, market feasibility, looking at merger and acquisition, competitive environment, competitive analysis, due diligence, this type of work. We have a dedicated market research team dealing with qualitative and quantitative analysis, in-depth interviews, focus groups, customer behaviour, buyer preferences, etc. Our publications department produces in excess of 70 off-the-shelf reports per year, also runs 9 free websites dedicated by sector where you can access much of our analysis just by simply registering at the site. We also produce a number of newsletters, and we have a PMR online service that brings together all of the above information types into one simple application available on a subscription basis. Finally, our data division, big data is a very much in the news at the moment. Our data division works with our clients to source, harmonise, analyse, evaluate big data or large amounts of data and put it into a predominantly a visual environment, helping clients to make decisions based on resource, based on cost analysis, cost evaluations, etc. Once again, if we can help in any of these areas at all, we invite you to contact us, and our contact details are at the bottom of these slides that you will receive. Okay, I think that's enough from me, and I think that's us wrapping up for today. We do have a couple of very specific questions that we don't have time to answer right now. We will be in touch with the people who submitted those questions on email, so you will get a response to your question. And it just remains for me to say thank you very much to everybody for attending. Once again, I hope you found it useful and there are some valuable takeaways for you. Gergely, thank you very much for your insight and analysis today. And it just leaves me to say thank you and good day to everybody. We hope to see you in the next of this series of PMR webinars. Thank you very much.
Thank you. Bye.
The